August 31st was a very special day for Team ITHOUGHT. On that day, we completed 5 years with our flagship PMS product Solitaire. It's been a very interesting journey for all of us, and I'm going to share with you some of the things that we learned with this experience. Firstly, we didn't have any grand strategy about how to make Solitaire an accepted product. In fact, when we began, we just started with a few friends and people whom I could just request to, experience this besides myself. I was also one of the largest investors in Solitaire. Along with me, there were a few friends and some people whom I could lean on to start with Solitaire. Despite the fact that I had a reasonable public profile as an investor, we did not use it for building Solitaire. And it was a conscious decision because I felt that here it was about the product and not about me. It was a difficult decision, but we were convinced that it was the right thing to do. So there was no question of doing road shows in cities, no TV appearances. I've never appeared even once on any business channel after we got our PMS license and started. No individual discussion of stocks in our portfolio anywhere. No model portfolio. No commissions and marketing through banks. No influencers. And no clickbait features like small case to lure investors. So we didn't have a small case portfolio to mirror the PMS portfolio, stuff like that, right? We didn't do any of those things. So we are pretty much a slow starter and almost a non-starter. We started investing, and by the time we completed deploying the money, COVID struck. Barely days after we built the portfolio, COVID struck. Consciously, we had decided to invest gradually because we were not comfortable with the market in 2019. We would invest only if the valuation of stock are acceptable to us. On that premise, it took us some time to deploy the money, and as luck would have it, when we finished deploying the money, COVID struck. When COVID struck, it was a straight lockdown, so we had no chance of getting new customers, we had no track record. And as such, we didn't have a mechanism to reach out to people even under the normal circumstances. The question of reaching out to people in COVID was non-existent. So it was a kind of a situation where we had cornered ourselves very badly. But we had a good product. We were confident about the product. We were confident the product will lose less than its referral point, which is the benchmark. And that more or less played to plan. But we are not getting incremental monies when the market fell because people have not experienced the product even for 3-4 months. How would they come and pour money in a situation like COVID? So, and we also didn't push too hard. We just kept telling people, if you have some money, please contribute. Some of the people did. And that was greatly beneficial to both them and to us. The product itself, Solitaire itself, was a simple product. We chose not to invest in business with high leverage. So we don't invest in any banks or NBFCs or any of those lending oriented companies. Businesses which use leverage heavily to grow are not in our usual universe. So it's mostly companies which have better balance sheets, which don't use leverage, which have reasonably good ROI, and which are attractive to buy in valuation terms. So it was always growth at reasonable valuation in Solitaire. We had a minimum market cap of 1000 crores. So upward of that, we were free to build a portfolio with either small or mid or large caps. So we had the freedom and flexibility to do it. So pretty much the investment approach is flexi cap, and we could go anywhere. The benchmark was NSE 500 and today it is BSE 500. So basically it's a very broad based benchmark, and we don't quite mirror the benchmark. The philosophy of the product makes us always invest away from the benchmark, in the sense that we would probably buy stocks which don't influence the benchmark that much, but maybe in the lower end of the benchmark, maybe within a rank of beyond 250, but good businesses at reasonable valuations. So this was broadly what we were trying to do. Once the lockdown was removed, we could attract a few investors, but still we didn't have a track record. If you had a 5-year track record at that time, maybe we could have told people that this is what we have done. We had nothing to show at that time. There's also this distraction of my own investment experience, because here we were trying to tell people about a product, not about the person. But it's very easy for market to mix the two up, right? Because it's very convenient also. But we chose not to engage with that in any form. So we were just going with the product. The most important thing about Solitaire was that we took less risks than the benchmark, far less in fact, and we did not really try to think about what moves the benchmark and position that in the portfolio. That we have never followed, not only in Solitaire, in any of our products. We invest based on our individual conviction in companies, which is grown bottom up, and the fact that we are able to create beta is purely a function of the strength of the alpha that we are trying to create. It is not the other way around. Most people work towards beating a benchmark. We are trying to find businesses which will do well, and when we are successful at that, beating the benchmark is not so much a problem. So in a market context like the present, we won't even be trying too hard, we will be waiting. In such circumstances, we will lag the benchmark for a period of time, but when the markets fall, we catch up. This is exactly what has happened in Solitaire, because the first 5-6 months were a phase when we were just going with the flow. We were not trying to actively beat any benchmark. And after that, we started buying businesses which we really like for the long term, and many of these companies have performed exceptionally well over these 5 years. An important point that we got right in Solitaire was in the thematic choices, and also in the longer holding period. We did not churn the portfolio too much, and by virtue of that, we were able to get better value from fewer ideas. Effectively, when you do that, the risk in your portfolio also reduces, because reinvestment risk doesn't come too often. All this has contributed to investors finding Solitaire rather than Solitaire finding investors. If at all today we have 1330 crores in Solitaire and 2700 crores in the overall PMS, it's entirely due to the patronage and support which investors have given us. They came, they invested more, they continue to invest, and it is their support which basically has built this PMS into what it is today. We don't have any special skills which we have put to play to grow the PMS. We are only trying to focus on the investing, focusing on what we think the investing should be, its aesthetic, its process competence, and resilience in portfolio construction. That's all that we have focused upon, and investors who have experienced what we have built, like it, and they contribute continuously. There are some features in our PMS which are very important from an investor point of view. For example, we are not looking at adding as many customers as we can so that we get 50 lakhs from them. And my own Solitaire portfolio, which started quite modestly, is today at a very good place, and I have also tried to add some money from my income which I can contribute. I have set a goal for myself that my Solitaire portfolio should be of this size, which is quite significantly higher than what it is today, which means that I would be continuously contributing. There are some business practices which definitely are important for you to know. We have not done any rebating. All our customers are treated equally, including myself. Nobody gets a special fee structure. There are some fee options in some products, but most of the products have a single fee option. We have consciously promoted the fixed fee approach so that when portfolios do extremely well in short bursts of time, the investor doesn't pay too much fees disproportionate to their profits. Like, we want the fee to just be a fixed sum. We don't want it to go to 5, 6, 7% in 1 year, and then the portfolio should not be in a place where it struggles to overcome that burden of the fee in the subsequent period. In 3 of our products, we have fixed fee options, and these 3 are domestic facing products. In one product, we have a variable fee option also. Ironically, that is a product where people choose the variable fee. Personally, I would want people to just take the fixed fee option, and this product is True Blue. In Solitaire, there is only one option, and a fixed fee option basically gives the investor upside, and the manager the opportunity to work harder when the markets are going to see a downside. So there is a very neat thought process going into this, and the pricing which we decided for at least 3 of our PMS products are way below peers in the mutual fund space. So we said that the PMS should be actually cheaper than a mutual fund, and it should deliver far more. This was the value proposition that we started ITHOUGHT with, and we continue to grow the practice firmly on the same principles. Now, how did we experience our investors? And that's the most gratifying part of this whole journey. Investors kept investing continuously. We have investors who give a 50 lakh and then keep investing 1 lakh or 2 lakh a month. There are people who put 10 lakhs a month. Continuously, people keep investing money, and because they keep investing money, it gives us an opportunity to keep making them participate in new ideas. We constantly work on new ideas, and the money that they keep adding helps us to buy those new ideas without selling anything, just for the sake of participating in new ideas. So in that sense, we don't sell any stocks just to buy new stocks. We have largely avoided that, and quite successfully also. We have not really taken some major cash calls so far. The only cash call we take is at the time of starting the portfolio, and that is based on the prevailing valuations of stocks that we want in the portfolio. If they are expensive, we will wait. But if they are within what we call as our valuation zone of comfort, we deploy the money immediately. So that's the only cash call. But after that, we keep investing continuously. We encourage investors to continuously contribute even small sums of capital, maybe a few lakhs, maybe 2-3% of their portfolio, sometimes going up to 10%, which helps us to buy new ideas. And an investor gets the upside in his existing ideas without cutting his winners just to participate in new ideas. And the exit lane through which stocks travel is independent of the incoming lane through which capital comes and finds new stocks. So these are two separate channels and we don't mix them up. So these are some of the things that we have done in our journey which work very well for our investors. We continue to stick with what works. There is no point in fixing what is not broke. And we believe that the real strength of Solitaire is, even if it has many times more investors than we currently service, we will still be able to do the same thing for every one of them. In that sense, we have created a product which has the right features, which has the process resilience, and which has the capacity to scale while delivering the same outcome. That in essence is our biggest and most satisfactory part in the journey of Solitaire over these 5 years. I want to thank each one of you for being there with us and for us. Without you, this would never have been possible. Thank you.